I'd like to join President Adesina to thank you so much for joining us today. Happy New Year. I think it's really a new year for Africa, a year that brings future tidings, positive tidings, after the continent has been buffeted by several confounding shocks that the president has already enumerated in his excellent keynote speech. So this report, as the president has shared with us, seeks to provide you, decision makers, private sector actors, global public investors, with evidence-based facts on where Africa is headed to inform your decisions and investment flows. And I hope that you will share the optimism that has been shared by the optimist-in-chief of the African continent, the president of the African Development Bank Group. Having participated with the team to draft this report, I was really very optimistic to see the resilience quality of the continent, which the president has already shared, and then the clear positive direction we have in all the macroeconomic fundamentals that investors and decision makers should care about. So this report will provide a bird's eye view on the growth, performance, and outlook of the continent, a lot of which has already been shared by the president, the key macroeconomic fundamentals and how it's shaping up in the short to medium term, and look at the socioeconomic effects of all these challenges that the president has already shared with us. Let me just summarize those challenges so we'll keep them in mind as we go ahead. It's something the president called the 3 C's. The continued impacts of COVID-19 and the potentials of other health pandemics that could arise, the continued impacts of climate change, which is creating a lot of losses and damages, that is putting a lot more pressure on the fiscal balances of countries, and also the continued impacts of geopolitical risks and tensions and pockets of conflicts around the continent. These 3 challenges has created a lot of the risks that the president has already talked about. And then we'll talk about policy recommendations, where I will delve a little bit more in detail. The president has given us the headlines of that, and I hope that in this presentation, I will dwell a bit more in the details and draw some conclusions. So here, we see the story that the president has already told us. If you look there in that map on the left side, the graph on the left side, you see that red line representing Africa. You can see that in the pack of countries and of regions and continents, the continent is doing really very well. After the depression, or the contraction in real GDP growth in 2020 that we saw, up to 1.6%, the continent rebounded in 2021, and despite all these global shocks that has been explained by the president, the continent has managed to continue to grow at a rate which is not only positive, but looking bright going forward, at a rate which is higher than most of its peers, coming second to Asia, but higher than many other regions that are represented in that graph. And again, at a rate where, when we looked at the macroeconomic fundamentals that underpins the growth story, we see positive trajectories across all of them. The significant volatilities in the global financial markets, the inflationary pressures that the president has talked about, the increased cost of capital and debt servicing costs, the disruption in the global supply chains, and the softened demand in the global major export markets where Africa depends on, has been part of what created the challenges. But you can see that due to good policies, macroeconomic reforms happening on the continent, and good governance that we are seeing on the continent, we are seeing that positive rebound. So I would actually want to give a clap to our leaders on the continent, because you are doing really well, despite the challenges that the whole global economy is facing. To put that in context, we know now that many regions of the world are facing serious risks of recession. But as the President has shown us and explained to us, all the regions of this continent have not only retained a positive growth, but the risk of recession is near to none on the continent, except in one country where the growth is not going the right direction, for several reasons which you will also find in that report. The President has already given us the numbers with regard to the rebounded growth in East Africa, in Central Africa, in West Africa, and all the regions of the continent, so I'm not going to go back into that. But let me dwell a little bit more on the differences that we've seen with regard to the structures of economies on the continent. Tourism-dependent economies on the continent have grown by about 6.3% in 2022, sustaining its recovery from 4.2% in 2021. Just mark the numbers, it's going up. This has been due to relative easing of pandemic risks, household savings in the tourism source countries that was accumulated during the pandemic, and the expected continued growth in tourism as COVID restrictions ease around the world. The average growth in oil exporting countries declined marginally to 4% in 2022 from 4.2% in 2021 due to sharp growth deceleration in Libya and tepid growth in Nigeria. This is also something that we need to keep in mind, because you see that countries that are really dependent on exporting of raw minerals and materials are the ones that are actually very much exposed to global shocks when it does happen. Other resource-intensive economies are estimated to have declined to 2.8% in 2022 from 4.7% in 2021. Now, that's a big decline, explaining the reason why the African Development Bank's AEO, African Economic Outlook Report for 2023, will be focusing a lot more on how to change that story in the natural resource sector for Africa's resource-dependent economies. So this challenge for resource-dependent economies was heightened by inflation on the household consumption and subdued global demand for some of Africa's major export commodities. As the President has already shared with us, tighter macroeconomic and financial conditions around the world put pressure on several domestic currencies on the continent. But again, the story in Africa were relatively positive, even with the continued buffeting of those challenges around the world. While most currencies depreciated, especially in commodity exporting countries again, that lost substantial value from a depreciation of 21% in Malawi, 21% in Malawi to 24% in Sierra Leone and 33% in Ghana, but we also had the highest depreciation, 69% in South Sudan. But we have positive story as well, even in that regard, because we had appreciations of currencies in Angola by 29%, Seychelles by 16%, and in Zambia by 14%. When you read the report, we tried to dig into what are the things that allowed countries that had appreciation in their economies to experience that positive gain, even when the global economy were all facing significant challenges due to the tighter global market conditions that we saw. Some of these depreciations, like I've mentioned, were driven by the tighter global market conditions, weak external demands, macroeconomic imbalances, and constrained revenues, and also weak investment flows in some of these countries. Then accommodative policies that has continued after COVID in some of the countries, and more favorable market conditions allowed the appreciation of currencies to happen. When you look at consumer price inflation on the continent, as the President already shared with us, we're seeing a positive direction as well. While inflation rose by 0.9 percentage points in 2022, reaching 13.8% in that year from 12.9% in 2021, we're seeing that it's going to go down, even though last year was the highest record in terms of the inflationary pressures that the continent faced. By regions, we saw in East Africa a 25.1% in inflation, West Africa 16.8%, Southern Africa at 13.2%. So these are regions where the inflationary pressures, the average inflationary pressures went into double digits. We'd like to see that go down. But we have good stories as well, where we have moderate and single-digit inflations, especially in northern part of Africa. In North Africa, we had only 8.1%, and in Central Africa, 7.3%. If you read the report, you will see that Central Africa has really done so well due to several policies and favorable market conditions they faced during the year 2022, a lot of which was explained in the report as well. The relatively low inflation in Central Africa was reflecting what I have said, coordinated monetary policies that I have implemented. So I would say kudos to that region as well. But also they enjoy the benefits of regional, relatively stable currencies that they had. Inflationary pressures generally on the continent was mostly imported inflation, driven by the pass-through effects arising from Russia's invasion of Ukraine on food and energy prices, and also sustained global supply chain disruptions following COVID and the global tensions that we've seen. And I have to say, beyond the global tensions, the growing calls for regionalization of trade, for friendshoring, for reshoring in trade is creating some movements within the global trade architecture that we are watching. In East Africa, the inflation there mirrored large price increases in Sudan and Ethiopia due to both supply constraints and demand pressures in both countries. But the increase in Southern Africa was largely due to inflationary pressures in most of the countries of the region, especially in Zimbabwe, which recorded the largest increase of 285% in 2022, very significantly up from the 98% of the previous year, and also driven by markup pricing of imports in that country. So when you look at all this story, you'll find that inflation, the most positive part for me in the report regarding the inflationary pressures is that on average, inflation is projected to gradually ease, declining from this 13.5% in 2023 to 8.8% on average in 2024. And this is below the 9.2% we had on average in 2019 before the COVID pandemic. So the continent is going back with regard to macroeconomic fundamentals to pre-COVID era. And this was also lower, the projected 8.8% is lower than the 9.6% average we saw between the years 2014 and 2018 at the end of the commodity super cycle. So these are all very positive with regard to inflation. On fiscal and current account balances for the continent, I will not dwell on it a lot because the president has also explained that. But what we see is that the direction is also on the positive side, where fiscal deficit has narrowed to an average of 4.4% in 2022 from 5.2% in 2021. And this is because of improved revenue performance in many countries, improved tax prudence and tax revenue collection in many countries, especially also the fallouts, additional revenues that came to some of the oil exporting countries because of the energy challenges every region had. Most of the not oil exporting countries like Angola, Chad, Congo, Equatorial Guinea, Gabon, and Libya recorded surpluses, with an average deficit only falling to 3.6% of GDP in 2022, from 4.8% in the previous year. So when you look at that same story as, again, with regard to fiscal deficit and current account balances, Africa is headed in the right direction. Can we do more? Yes. Do we need more? Yes. But it's just like saying that what we've done, what the countries have done in 2022 is very positive and should be continued. I've also mentioned on the current account balances, when you look at the same story, we find that same continued decline in the current account deficits across the continent. But one of the most positive here is to see that capital inflows on the continent has rebounded in 2021 from the fallout caused by COVID-19. But still, on average, we're expecting that the continent will still have a net outflow, or portfolio outflow of about 22.5 billion in 2022 when all the statistics are reconciled. So while financial flows are going the right direction, we still need to do more in terms of stemming capital outflows from this continent. Now, the next challenge, which we have all discussed so much, I've discussed current account, is the debt vulnerability, which remains elevated, even though getting better in some countries, but we're seeing greater risks, not because countries are borrowing more, because of the tighter global financial conditions and the appreciation of the US dollar. So we expect that the debt to GDP ratio will remain elevated at 67% in 2022, and this is expected to go down to 65% in 2023 and 2024, pending continued prudent policy implementation and public financial management in countries. By the end of September 2022, 23 African countries were either in debt distress or at high risk of debt distress, from 20 in 2020, which means the number of countries that are getting into that risk is increasing. When we try to decompose the debt-creating flows, this shows us that Africa's debt dynamics is mainly driven by exchange rate depreciation and high primary deficits. So if you look at the report, you will see we try to understand exactly what is happening on the continent and why has this debt challenge remained a sustained problem on the continent. Now, all these macroeconomic fundamentals means more for us as a development bank, and I guess for all of us, with regard to the impacts on people. So what are the socioeconomic impacts of these dynamics that we're seeing? On this graph, you will see that poorer households have borne most of the burden from the current wave of high food and energy price inflation due to the confounding challenges that we have explained. So we see that many in Africa, on average, households spend about 40.7% of their incomes on food and energy. 36.3% of that is on food. And this is on food expenditure. But despite the large number of Africans that are involved in agriculture, households only receive, on average, 15.2% of incomes from food sales. So on the net, there's a lot of outflows from households in terms of just buying food to eat. And that underscores, again, the need for the push that the president is having with regard to boosting agricultural production through technologies for African agriculture's transformation in Africa. And the summit he's announced that we're going to have in Dakar next week. So this challenge of having more proportion of their income spent on food, when you look at the graph, you will see that the higher proportion of that income is in the low-income households. And this is what has created the 15 billion people, additional people, that were pushed into extreme poverty. And I have to say, one of the worrying sides is malnutrition as well. So not only that, many countries estimated 15 million people in 2022, additional to the 26.9 that we had in the AEO for 2021, were pushed into extreme poverty in 2022. When you see the effects of food, energy, and the combined effects of that, you will see where the pressures are coming from. And this already leads us to where countries need to focus with regard to policies: energy, agriculture. If we solve those two, we will be able to alleviate a lot of the challenges for the most vulnerable people on the continent. So when we go forward, considering all this, when you read the report, please, you will find details on how those transmission effects happened, both for food and energy, and for your countries, then what policies that could help to address that. The president has highlighted all the risks, so I'm not going to go back into it, but the global recession and softer demand will remain a high risk in 2023, just like high interest rates and cost of debt servicing. Many African countries have higher cost of debt servicing even if they have not borrowed more because of the appreciation of the US dollar. So, and also this creates challenges not only for Africa, but also for the creditors, because no creditor wants a default. But what this confluence of factors is creating is a higher risk of debt default in some African countries. Another one which is always topical is the physical risks of climate change, which is increasing the fiscal risks of countries. Because countries spend a lot of time building infrastructure, and then in just one high impact climate event, it gets washed away. And those infrastructure will have to be rebuilt. And that's in addition to the additional cost of adaptation and mitigation and the policy changes that is also shifting resources away from the continent. So the confluence of factors on climate change and climate change impacts deserve continued attention. But another one which has always worried me since I started doing economics is understanding why Africa, with the abundance of natural resources it has, continues to depend on primary resource sales. And our analysis show that commodity dependence exposes Africa to two things. One, you get less the more you sell your commodities, because the real price of Africa's commodities in the global market is going down since 1960. And then it also exposes to high volatility of growth. If you look at GDP growth on the continent, it tries to mirror the prices of commodities. So it's like we're just rising and falling depending on the temperature in the global markets. So we need to address those risks. These are high risks for us. Low risks, the president has also mentioned, we still have very low rates of COVID vaccination, and as the world opens up, there's every risk. Potential is still low to moderate, but there's a potential risk of a resurgence of COVID or any other variant or any other health pandemic. Regional conflicts we watch on the continent. We need to look at different countries. There are some of the regional conflicts, and the type of conflicts are also changing. That's actually impacting market activities and the business world. Then the political risks in terms of policy reversals that could occur if we have challenges, and also the consumer confidence, impacts on consumer confidence are things that we need to watch. Let me spend a few time to talk a little bit on the policy recommendations that we come up with in this report. The president raised the issue about policy coordination. We have the traditional tools we use, the fiscal policy, the monetary policy, the structural policies, and oftentimes when they're implemented independent of each other, they create knock-on effects on business environment and the general money flow in the markets. So there's very significant need for a timely and aggressive monetary policy tightening for countries that have acute inflation. So we need to consider what is going on in particular countries, so we cannot generalize for everyone. But coordinating that fiscal and monetary policy to optimize outcomes of targeted policy interventions to tame inflation while also addressing fiscal pressures in the countries is critical. So this is something that we will be working with countries on country-by-country basis in our country-focused reports, which we'll be releasing in June to try and address with regard to specific countries on this continent and specific regions as well. Boosting trade, as the President has mentioned, especially focusing on manufactured products and cushioning economies from the volatile commodity market that we've talked about. How do we help countries to boost trade on the things that the continent has? Accelerating structural reforms that the President has talked about in tax administration is very, very important. And that is why the African Development Bank has launched the Public Financial Management Academy to help countries with that. But investing in digitization and e-governance to create better transparency and enact rules that will curb the flow, the outward flow of capital from the continent, illicit financial flows will also remain very important. But we can't underscore institutional governance to leverage private sector financing. The financing needs, as we estimated in the AEO, is huge, and the public sector cannot do it alone. So policies on country-by-country basis to be able to mobilize private sector is a critical one that remains in addressing the issues on the continent. Structural budget deficits and accumulation of budget debt, it has specific policies as well for specific countries. So I can't go into so much details. We are currently working with several countries on the continent under the Public Financial Management Academy and the Debt Action Plan to try and address some of those issues. But while we do this, we remember that the more vulnerable, the poorer households suffer the impacts more. And therefore, there remain need for support to the more vulnerable households in terms of cash transfers and other supportive policies in that regard. On boosting trade and enhancing resilience, to enhance resilience to spillovers on the continent, we already have the instruments, the Africa Continental Free Trade Agreement. But we need to invest more on regional hard and soft infrastructure to ease the cost of trade between countries. Promote free movement of goods and services on this continent. It might sound simple, but it actually adds a lot to the cost of doing business between countries on this continent. But we also need to strengthen the Africa payment system to ease financial and transactions being done within the continent. And as well, leverage a lot more of the Africa Continental Free Trade Agreement that the continent has already enacted. And for us, the private sector remains central, and mobilizing private sector demands a focused attention. And that is why our AEO 2023 will be focusing on just that. But the multilateral development banks should think very carefully about how to use their risk capital to catalyze private sector financing for inclusive growth and sustainable development on the continent, while countries also look at policies that will enable private sector, government-enabled private sector development, I would call it. But the global financial architecture itself will need to be looked at, because the current structure of that global financial architecture continues to limit financial flows to areas of need to achieve the global sustainable development we have all committed to. So what are the key takeaways for us? Global recession and economic resilience is the story of Africa. Amid heightened risk of global recession, African economies continues to show resilience. I think that deserves a clap. So despite the confluence of the multiple shocks, growth across all 53 African countries was positive and with a stable outlook. And as the President has already told us, 5 best performing countries will return to the league of 10 fastest growing economies in the world. But this welcome recovery and welcome story comes with a cautious optimism, as the President has talked about, because of the risks that remain that the President has talked about. So countries, regions, and the continent need bold policy actions. And because of the diversity of the continent, those policy actions need to be tailored to specific needs of countries. And we'll be there to work with you going forward to meet that. But across the continent, one thing is common: leveraging the private sector, leveraging the private sector, and leveraging the private sector. That's the way to go. And we will be talking with you a lot more about this when we come to the AEO that will be launched in May. Ladies and gentlemen, my key takeaway from this is that if I were an investor, I should jump on a plane and head for Africa. And seriously that. Because when we've looked at all economies, of all economies across the continent, Africa is really standing, across the world, Africa is really standing out, not only because of these positive macroeconomic fundamentals that you have seen, but also because of the huge potentials that Africa has always had. With a market size of 1.46 billion people, 60% of them 25 years of age, is a huge market to harness. Rich endowments in both renewable and non-renewable energy resources to power climate-smart and green economy transitions is a continent where the whole world should really try to focus on if we really are serious about climate change, addressing climate change and achieving the Sustainable Development Goals. The continent also has significant potentials in blue economy revolution, with 75%, and I mean 75% of its countries having huge potentials in the blue economy, markets. Again, those interested in investing in blue economy, Africa is the place to go to. And the continent has more than 20% of global annual production of 5 key minerals. If you look at those minerals, you wonder why we say Africa is poor. Africa holds 80% of platinum, 77% of cobalt, 51% of manganese, 46% of diamonds, 39% of chromium, 22% of gold deposits, and over 60 to 65% of arable land still remaining to feed the world. So smart investors come to Africa. Policymakers in Africa enact policies to make sure that these potentials benefit the people of Africa. And the strategic industrial policies we've talked about, very simple ones we would like to focus on: local content policies and franchising policies. Try and attract those big conglomerates to come and invest on the continent, create jobs, drive sustainable development transitions, and improve the quality of lives of our people. Thank you, Mr. President.